So now we are discussing the statement of financial position. So why we prepare the statement of financial position? We prepare the statement of financial position to know the actual position of our business. With actual position of our business, I mean to say, when we invested our money, how much was the value of our business, and now after 5 years or 10 years or whatever it is, how much is the value of our business. So definitely the value of the business would like increase like as the years pass on. Why? Because we would be earning, that is provided if you earn profits, we would be earning profits, we would be investing our profits in various investment options, and those investments would grow in value. The asset value whatever we have purchased because of demand or something in the market, high demand in the market, its value may increase. Okay. So like, and as your business is increasing, you may buy more and more stocks when compared to when you started the business. So your like inventories value would increase. You will be generating more revenues, so more cash flows would be coming to your business as you grow old, isn't it so? So all these factors are very important are very important factors and key factors. And if all these assets what I mentioned to you grow in value, that shows that business value is increasing, correct? So what shareholders want? Shareholders want the business value to increase. They always want higher value for the business in which they have invested. Okay. So now when I speak about assets, I can divide the assets in two parts: current assets, non-current assets. So current assets, as I mentioned yesterday, would give you economic benefits within a year. Non-current assets are assets which give you economic benefits beyond a year. That means it takes more than 1 year of time to give you economic benefits. Okay. So some of the examples of non-current assets are property, plant and equipment. So you have a plant, that is a factory, you have equipments, you have a property, that is land. So altogether all these are non-current assets. And the difference between current and non-current assets is like I have explained you right now. Non-current assets would give you economic benefits in a longer period of time, and they cannot be converted into cash immediately even. Okay. That is also one of the issues with the non-current assets. Goodwill is a non-current asset and it is an intangible asset. There are assets like of two categories. See, when we speak about economic benefits, we have divided assets into two types: current and non-current assets. But when we speak about the tangibility or intangibility, we would divide assets into two types. That is tangible non-current assets. You know what is tangible? Tangible is nothing but it has physical substance. That means you can see that asset, you can touch that asset, you can feel that asset. It exists physically. It has physical substance. Sorry. And when I speak about intangible assets, intangible non-current assets. So intangible non-current assets do not have physical substance. No physical substance. You can make a note of all these points. So what do you mean by no physical substance? That means you cannot touch, you cannot feel that asset. So what kind of assets I'm speaking about? I'm speaking about such assets which are documented, like patents. So patents is nothing but when you have developed some technology, okay, of making something, and that technology like you want a safety for that technology, security for that technology, so that no one should copy that technology or should recreate that particular like technology without your permission. permission. Okay. So like, of course, see, if I have a technology and you also have a similar kind of technology what I have made, but with some difference, then that is all right. But if you want to copy my technology and want to recreate with your name, it is a crime because I have done the hard work and you cannot like take advantage of my hard work and cheat me like that. Am I right? So patents is nothing but getting your technology patented. That is like it is nothing but a legal right you would create for your asset. If anyone wants to recreate for your technology, if anyone wants to use that technology without your permission, they cannot use. They have to pay you royalty for using that. So patents, trademarks, copyright. See, copyright, I'm speaking about movies. So if you want to recreate some movie which has already been produced, so you can buy or purchase the rights of that movie and you can recreate the movie again. That means with your characters or with some other star cast, you can make that movie again. Okay. So there are many movies, Hollywood movies and like various other film industry movies which whose content or subject is taken by various filmmakers around the world, and like if you are making that exactly, then you have to buy the copyright of that. So it's an intangible asset. Then franchisee, it's also an intangible asset. Then comes goodwill. Goodwill is something like you have name, fame, and that is bringing you business. So that is also an intangible asset. Okay. So all these are examples. Please make a note of all this. Just giving you detailed explanation of all. I'll move forward. Okay. Come on, write down all these points. If you're not able to understand anything in my handwriting, you can ask me immediately. I'll explain you. Abhishek, are you following?
Yes, sir.
Bisharo, are you following? Hello. Bisharo, are you following? Are you following? I'm not hearing your voice. Okay. Anyone has anything? Anyone has got any doubts to ask? Hello. See all these assets here, other intangible assets. I have given you the example right now. My God. So other intangible assets I have given you example right now. Investment in associates, yesterday I have discussed. Investments in equity instruments, that means you're buying some stocks of some company and the value of that may also grow. So you can see the differences here. In 2006, this was the position of your balance sheet. Your business value was high. This year the value has decreased. So is it not giving you a clear picture of your business value? Yes, your business value was of this much previous year. Now your value is this much. Your value has decreased. Maybe because your investments have not grown in value like that. Like you can see here, it was $156,000.
Hello,
Here it is
sir.
100. Hello, yes, Bisharo. Hello.
Hello.
Yeah, can you hear me? Hello. 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 Abhishek, can you hear me?
Sir, I can hear you, sir.
I don't know, like I think you have some network issue, Bisharo.
No, sir,
Please.
I can't hear you.
Yeah, you have some network problem maybe. The other student can hear me clearly. Hello. Are you able to see the screen, Bisharo? Hello. Are you able to see the screen? Abhishek, can you hear
Sir.
me?
Yes, sir, I can hear you, sir.
Okay, okay. I think in UK the network is good.
सर थोड़ा पहले का स्क्रॉल करो ना सर, थोड़ा मैं नोट डाउन कर रहा था. और थोड़ा नीचे स्क्रॉल डाउन करो सर.
Abhishek,
सर.
hello. Oh, nothing, nothing. What's the problem? Like there's a network issue, I think, from other students. She's not able to join. Okay. Have you finished this so that I can I can move forward?
Yes, sir, you can move forward.
Yeah. So now these are like you can see the values. You can see the property, plant, and equipment value was high in the previous year. This year it has decreased. It was high. The goodwill was high. It has decreased. And intangible assets were like almost equal. And investment value was high. It has decreased. And then investments, that was investments in associates. You have to see yesterday's video to understand what is associate. And investments in equity instruments have decreased. So all this show that the value of the business has decreased this year. Okay, the difference between these two can tell you. Can you tell me how much is the difference so that I can write on the value there? 9,45,000 minus 45,460 minus 9,01,620. Can you calculate? I'm saying just difference between these two values.
Sir, it's 807.160.
How come it's possible, Abhishek? 9,45,460 minus 9,01,620. Difference is what? Simple. This minus this. Can't you tell me how much it is? Come on, do that. Write on this. Okay, put all this figure into calculator. Minus this figure. Fast.
43,840.
Sorry.
43,840.
So you see 2007 year, the value of the business has gone down, right?
Yeah.
Now let's go to the current assets and see here current assets already, they give you economic benefits in short span of time, and you see the total value of current asset has also decreased when compared to previous year. It was high, this year it's low. What does it show? Like, just find out the difference, and like that shows the value of the business has gone down when compared to previous year. So it helps us to plan in a better way how to increase the value of our assets in next year, correct? If we don't have, if we now to judge a business performance, or if shareholders wants to know whether the company is doing well or not, its value should increase, but its value is decreasing. So it's a serious concern. The company should now look into itself and try to like change the strategies and try its level best to increase the value of the business so that it can increase value for shareholders, correct? Now tell me the difference. How much is the difference in current assets? Bisharu, have you joined? Can you hear me now? Can you see the screen? Hello? Bisharu, I'm speaking to you. Can you hear my voice? Hello? Hello, can you hear my voice, Bisharu? Is the screen?
Yes.
Yeah, okay. So now can you find out the difference between these two values? The value was high in the previous year, it's low in the current year.
Sir, it's 57,700, sir.
57,700.
700.
So the current assets have gone down by this much. It's a dismal performance, not a good performance by the company. And when it comes to share capital, they have raised additional capital there. But one good sign, what I am seeing here is still, even though the value of the business has gone down, still this is a profitable business. Why and how? You see, your retained earnings was 1,61,700 in the previous year. That is in the year 2006. But now this year the retained earnings have gone to the extent of 2,43,500. Can you tell me the difference between these two values? The difference would be nothing but the profit which you have added this year. Okay, so this would be the profit. Can you tell me the difference between these two? So I'll write down the profit here.
$81,800.
So this is the profit for the current year. Even though the value of the business has gone down, even the assets have gone down, but still the business is a profitable business. Why? Because the previous year retained earnings balance is this much. How much we have earned and how much we have retained was this much. This is a account in which every year the profits are transferred, and this account accumulates every year's profits. So like this year's profit got accumulated to the extent of 81,100, and your retained earnings balance is this much. That means you have earned good profits, decent profits. Okay, and other components of equity have gone down. And yesterday we have discussed about non-controlling interest. These guys have also got some good, like their value has also increased. Why? Because they also have got share of profits. And then we see the liabilities have decreased, and total liability and equity has decreased. So because the total of balance sheet should always be equal, the total of assets should always be equal to total of liabilities. Okay, that is the rule of balance sheet. But what we are seeing here is the value of the business has gone down. Company should seriously rethink about that. Okay, so this is a total explanation about balance sheet. Please see this balance sheet. But okay, let me discuss some points here now. Current assets. What are the examples of current assets? The examples are given here. Inventory, that is stock, receivables, and cash equivalents, which can be converted into cash immediately. And then comes the total as equity and liabilities section. Then you have share capital, retained earnings. It's a part of equity, and some other components of equity, which we will be discussing in details. Okay. Then non-controlling interest, yesterday I have discussed. And let me be very clear, this is a group financial statement. This is a statement of financial position, example XYZ group. And I have explained yesterday what is a group. And then non-current liabilities are nothing but long-term borrowings, deferred taxes. That means you have not paid your taxes this year, which you have to pay next year. So it's a long-term liability. Then some provisions you have made related to some investment or some expenditure provisions you have made. And then comes the current liabilities. These are the liabilities which have to be settled within a year. Okay, so payables, short-term borrowings, tax payables, provisions, etc. And then you add up these values, you get the total balance sheet value. Okay, so please go to this now. We'll move forward. Any doubts? Anyone want to ask me any questions? Hello, you want to ask me any questions? Abhishek, you want to ask me any questions? You're welcome. You can ask me. Once you have seen, I'm scrolling down. Okay, now let's discuss other things here. So now let us start with the first theory explanation of each and everything. Okay, So now I like, what is the standard which deals with presentation of financial statements? International Accounting Standard 1. What you should prepare as per the IAS 1, it covers all these statements. Statement of financial position, statement of this we say SOFP, then SOPL and OCI. So this is what I am supposed to explain you. Give me 5 minutes of time, I'm explaining. Then comes statement of changes in equity, statement of cash flows, and then comes the notes to financial statements. That is, you write it in footnotes. What do you mean by notes to financial statements? See, that means if there is a property, plant and equipment, okay, and this property, plant and equipment you are showing as $100,000 in the balance sheet, in the statement of financial position, okay, and every year you are depreciation of this property, plant and equipment at the rate of 10%, okay. So but you can just write the carrying amount or book value of this asset in the balance sheet or statement of financial position. That is, I'm writing for the first year you have to write 90,000 because 10,000 got deducted. But this you cannot do like this. You just have to write PPE 90,000, okay, and the additional information regarding the depreciation, that is like, which is at the rate of 10%. Straight line method you're following, rate of depreciation is 10%, okay, and you have bought this asset from Mr. X, okay, and the useful life of the asset is, of this property, plant and equipment is, let's say 10 years, okay, and you like in the 5th year you have done some addition to this asset or some improvement. 8th year you have sold some part of the asset. So see, all these are extra information regarding that history of that asset, correct? All these are extra information. Information number 1, 2, 3, 4, 5, 6. So there are various informations available for that particular asset, which you cannot write on the face of the statement. You cannot show it in the statement of financial position or balance sheet. You have to show them separately, and that you would do under year. Notes to financial statements, understood? That means all the extra information, whatever information regarding the asset should be shown in the footnotes or notes to financial statements, we call it, okay. This notes to financial, just a second. This notes to financial statements, just a second. Well, this is not working, just a second. So this notes to financial statements is what we we have after the preparation of all the financial statements. That means after preparing statement of profit or loss, we prepare statement of changes in equity. And after preparing the statement of changes in equity, we prepare the statement of financial position. After preparing the statement of financial position, we prepare statement of cash flows. After preparing all these statements, we write the additional information in the notes to financial statements, and we call this as footnotes. Okay, footnotes. That's so this is what is the information. Now profit or loss for the year can be known by preparing the statements. How items are disclosed, that is the question. See, some items must appear on the face of the statement of financial position or statement of profit or loss and other comprehensive income. That means if I say PPE, property plant and equipment, should appear on the face of statement of financial position. If I say salary, should appear on the face of statement of profit or loss. Correct? This is an expenditure, this is an asset. Please tell me yes or no. Are you following this? Bishara, you're not interactive. You're not giving me any answers. I'm asking you. And Abhishek, you even are not giving any answers. Please interact with me. Why don't you interact? Now, so other items can appear. So that's what you cannot show on the face of the statement, you have to show in the notes. And the formats we have already discussed. How will you identify a particular financial statement? Of course, it will have the company's name above the statement, like X company statement of financial position or S company statement of profit or loss. So you'll be seeing the name of the company. And that's what here you can see the name of the reporting entity would be there. If it's a single entity, that means X company will be shown. If it is a group, then XYZ company, it's a group. Okay, it will be written in this way: SYZ group statement of group statements or consolidated statement of financial position. Okay, it will go in this way. Then date of the end of the reporting period as on 31st December if it's the end of the year, or 31st March. In UK it is Feb 28th is the last day, or 29, correct? And then March 1st the financial year starts in UK. Then presentation currency, that is either the pound sterling, like either euro, or like this is pound sterling, euro is this, or dollars, anything. And then you have to round off. That means if like property plant and equipment is of the value 104 8.78, so you should write 1050. That means rounding off. Okay, round figures. Then reporting period is nothing but you prepare the statements annually once, definitely at the end of the year. Okay, and timeliness, C2 is mandatory, that is the standard actually. And timeliness, see, you should prepare the statements once in a year, and exactly uh, why we take 1 year, because we come to know about the performance of the business. Okay, so you have to follow the time period of 1 year. So statement of financial position we have discussed. Right now the formats. And see, your entire this particular book covers all the like the chapters, whatever you're going to study is like, see, chapter 4, 5. You will be studying all this particular elements what you're seeing of the balance sheet. These all are definitely given guidance by some accounting standards, like IAS 16, International Accounting Standard 16, deals with property, plant and equipment. That particular standard, IAS 16, what does it guide you? What guidance it gives? How to recognize Like how to recognize this as an asset. So I would write criteria. So every standard generally teaches or guides you these three things. First one, recognition criteria. Second one, measurement basis. Third one, disclosure requirements. Okay. For example, property, plant and equipment. Is it an asset or a liability, Bisharo? Bisharo, I'm asking a question. Is property, plant and equipment a asset or a liability? Hello? Hello? What is this? The class going on? Like, are you people online? I'm really doubting.
Yes, sir. I'm hearing you.
Yeah, just tell me then. Yeah, tell me then. What is property, plant and equipment? Is it an asset or a liability? Yes. What is the answer? Property, plant and equipment is an asset or a liability?
But what?
Sorry. Hello.
Yeah.
Hello. I'm asking what is this?
Yes, sir.
Property, plant and equipment is an asset or a liability?
It's asset.
But why? How come you can say it is an asset?
Equipment. A fixed asset.
Your voice is
It's
not clear,
asset.
Vishal.
Fixed asset.
Yeah, it's a fixed asset. Why? Because it satisfies with the definition of an asset. So what is the definition of asset? Asset is something which gives us economic
Have
benefits.
basis or have a value to the organization.
Sorry, I did.
Can you hear? Sir?
I'm not able to hear you properly. You're having some network issues, probably, maybe.
That possesses or have a value to the organization, which is tangible or not tangible. It can
Yeah,
be a
see,
capital or fixed asset.
yeah, of course, it satisfies with the definition of asset. What does like definition of asset say? That this property, plant and equipment should give you economic benefits, future
Yes.
probable economic benefits.
Yes, it has economic benefits. It can
Yeah,
be
and
combat.
its cost should be measured reliably.
Yeah.
Cost should be measured reliably. That means it should have some value. Okay, otherwise you cannot write it in the balance sheet, correct? So first thing is
Yeah.
the international accounting standard teaches us how to recognize something as how to recognize the proper like something as a asset. Okay, tangible asset. Fine. So this particular standard deals with tangible assets.
Yeah.
And then how will you measure the asset? How will you measure the property?
Hello.
Hello.